G'day expats and welcome to another episode of Expat Chat, episode 92 today. And as always, I'm joined with my friend, colleague, mentor, business partner, Brett Evans, the Managing Director for the Europe, Middle East and Africa's region. G'day, Brett. How's the sandpit treating you today, mate?
Mate, all good here, thanks. All good, and we're getting very close to end of summer holidays, and kids are feral. They need a bit of structure, so I'm looking forward to that happening. To the folks out
Yep.
there who are new to the podcast, I'm joined by my mate, colleague, and the guru from the Gold Coast, James Ridley, who's the managing director for the APAC office. G'day, mate.
G'day. And one thing I was saying to Brett before we hit the record button is the Gold Coast is getting ready for the Pacific Air Show, where it's next weekend across 3 days. They have all these amazing airplanes that do acrobatics, and right now they're doing all their sort of I guess training before the big day, and it's almost like they're buzzing the tower, to be honest. Like something off Maverick. Every time I'm on a call with a client, can hardly hear what they're saying because they're just coming so close in the tower that we're in the building. It's really interesting, but we're getting a really good view. So I might have to film something and we can put it on the socials.
Mate, box seats. I love it. I love it. So
Yeah, mate.
and today we're going to talk about a pretty topical topic, that a lot of expats are talking about right now. The
Mm.
Australian dollar, currency, FX. What do we do? Do we zig? Do we zag?
Yeah, absolutely. It's anyone's guess at the moment, but I think there's a few things playing into it with how the US dollar is tracking versus the AUD. So, I mean, before we jump into it, Brett, might get the little disclaimer out of the way.
Yep, all the information that we have the privilege and the pleasure of sharing with you, good folks, today should be treated as informational and educational purposes only. Please do not take this as personal advice, and if you do need personal advice, have a chat to us.
Sounds good, mate. Now, jumping into it, the US dollar, it just seems like it gets strength to strength against the AUD every month. We got up 68, nearly 69 pretty much, only what seemed a few months ago, and now it seems to be walking back down those stairs. What's going
It's
on?
it's an interesting one because it's like the boiling frog analogy. You know, the frog in the pot, you slowly turn the temperature up, and it doesn't realize it's cooking. And the same thing with currency as well too.
Mm,
Because we, as a default, tend to benchmark the Australian dollar against the US dollar, we
mm,
think that we're doing pretty well if we're strong against the US. But what we're not considering is the Australian dollar against the pound, Australian dollar against the euro, the Swiss franc, all the other currencies. And what's been interesting over the last 12 months has been the gradual weakness of the US dollar against, say, the euro, for example. If I go
mm.
and look at the numbers here, um, you know, US against euros down 7% over the last 12 months. And
Yeah.
the Australian dollar is actually down 6% against the US dollar over the last 12 months. So on a cumulative effect, there's good opportunities there for expats, especially if you're earning, foreign currencies like euros and pounds.
Yeah.
So I think it's a good opportunity to run through with the good folks out there what causes the Australian dollar to move and what those catalysts are, because then when you're reading the Sydney Morning Herald or the Fin Review, or don't tell me you read the other rags, they're all pretty much, gas
New,
bagging.
new,
Um,
news.com.au, mate.
exactly. Yeah, yeah, that's the one. I didn't want to name names, but yeah, yeah,
Come on.
yeah. When you're sort of reading those things, just to be able to put context and some applied thought towards where the currency is going, thought today we'll
Yeah.
jump on, explain why the dollar does what it does, and where to next.
Yeah, well, I mean, first and foremost, especially in the last 12 months, 13, 14 months, one big impact on the currency is when central banks, the US Federal Reserve and the RBA play with interest rates. And we've been going through this period where obviously interest rates have gone up. And if we had a scenario where one central bank of, say, the RBA Australia didn't do anything with the cash rate, and our cash rate stayed at 0.10% back in the day, and then the US Federal Reserve raised the cash rate up to, say, 6%, the impact that that would have on the Australian dollar versus the US dollar, Australian dollar, the value of our currency would fall off a cliff.
Pacific peso.
That's right. So what I'm getting at with this example is that when there can be a widening gap between the Australia's central bank policy rate and the US Federal Reserve's central bank policy rate, it can create these disparities between the value of our currency. And that's actually what we've seen probably in the last 2 months. Um, it's been chopping and changing. We did see the currency at 69 cents, and then now it's been winding back. And one of the contributors to the value of the Australian dollar right now being 65.49 is that there actually has been a little bit of a widening gap there. Remember, the last two RBA decisions, the RBA decided to paused at 4.10%. The most recent increase to take the cash rate up in the US was to 5.50%. And what's that getting at? And Brett, you've done plenty of examples like this before, is what it means is if I was to take $1,000 and put it into a savings account in the US, I can get a much better value out of, and I suppose a better return on those cash savings. And that's where we find the difference starting to take place between the exchange rate. And that's one contributor right now that's playing into the currency. And again, when we look at the currency market, much like the share market, it is also forward pricing. It's, the currency market trades 24/7. It is a share market on steroids and then some. So it's forward pricing. It's taking in all these different data points. It's trying to, obviously think where the currency might be heading as well to a degree. So that's why often when we see a central bank policy rate decision only a week or two out, the currency sometimes does some funny things because of I suppose investor or currency trader sentiment. So that's what we're seeing right now. That's part and parcel one reason. Kicking it over to you, Brett. What's another reason?
The other one, and it can be a combination of economics of the local country. So whether a recession's looming or it's not, the big one that affects Australia, which in turn is intrinsically linked to whether a recession is coming or not, is commodity prices. We're a commodity-driven country. And when you look at Australia's prosperity, it's always been when commodity prices are strong. And you look at Australia's weakness, it's always when commodity prices are weaker. And obviously, no guesses out there for who's the main driver for the commodity prices, and it's our friends up in China. So when China's killing it, Australia does tend to do pretty well. When we had that budget announcement recently where there's a price surplus, that was all driven on higher than expected commodity prices that Treasury was modelling on. So we get those little wins every now and then, but also too, we get the downfalls when the commodity prices, not collapse, but fall, which is what pretty much all the major commodity prices have done over the last 12 months. When you look at iron ore, coal, even energy prices, they're still up there, but not as much as they were, say, 12 months ago when obviously Ukraine was happening. So there's that bit of a hangover period that we're seeing at the moment as things come down. Now, what people need to look at very carefully, if you're listening to this call or watching the call, you need to focus on two key things: economic data and commentary coming out of China and interest rates. Those two things are going to be the drivers, either positive or negative, of the Australian dollar over the next 12 to 24 months. Because if China's falling over, then we're going to see weak Australian dollars because commodity prices are going down. If the RBA decides to hold on rates and Jerome Powell, James's mate JP, keeps increasing rates in the US, that's going to drive the Australian dollar down. If we have both, then the Australian dollar is going to get down even more. So look, FX, currencies, it's anybody's guess where these things go. We see some pretty extreme articles in terms of forecasts. I think the general consensus is obviously if those situations occur, it is going down. How far it will go down would depend on a lot of factors. But, we're sitting right now, 65.38. Could we see a 5 in front of it? If both of those scenarios play out, 100%. We have seen a bit of commentary. I don't know, I wouldn't call it research, but commentary out there saying that China is the next Japan with respect to economic, sort of circumstances. What Japan went through in the 80s and 90s, China's now going through now because they can't maintain their rate of growth. They've done too much property. There's a lot of other mitigating factors as well too. So people are trying to draw from those two scenarios and say, well, if that happens to China, look what happened to Japan where it is now. So therefore, in turn, Australia's in a lot of issues. I don't think we're there yet. I think, China's coming out of the COVID bubble late compared to the rest of the world. So we need to give them the benefit of the doubt of probably the next 12 months because they're about 12 to 18 months behind the rest of the world when it comes to opening their economy, opening their borders and getting back to business. However, in 12 to 18 months' time, if they're still struggling, then, there could be some bushfires on the horizon that we need to take into consideration, but good for expats. Repatriating money back to Australia. We find that 85% of our clients do return to Australia. And based on that, we always talk about managing currency risk. You want to accumulate wealth in the country you intend to return to or retire to, so that when it does come time to get on that plane, there is no, let's hope the FX rate is good for us at the time. Your money's there waiting for you.
That's right. Yeah. And I mean, it really, and I think we emphasize it so much just about taking a dollar cost averaging approach to managing your currency risk. And it's just a case where if you've got, I guess, responsibilities back in Australia with your cash flow, paying down debt, other things, you're sending an amount home either on a monthly or quarterly basis. That's a really sensible way they're handling the currency impact. And right now, if you're in a country where, you're tethered to the US dollar to a degree, especially the Middle East, you're just getting a much better value right now for the Australian dollar because it's weak. I don't I don't know if commodities can come back any further than they have in the last 12 months because a lot of them, it's been sort of broad-based. It hasn't been too isolated to specific ones, iron ore and those sort of ones, lithium. So I'd be shocked if they could come back any further. And we always have these lag effects as well, lag effects. China at the start of the year, the first quarter it was actually doing really, really well. But now, now that it's been about probably nearly 6 months from that, they're slowing right down again. So China's got a weird problem. They've essentially got no inflation, and the country itself or the government is really trying to work out ways that it can fire up, I guess, the engine, and that engine being the economy, and get everyone spending and build demand and everything, get it going. But they've somewhat run out of steam as well. So there's a lot going on right now, and there's going to be a lot going on for the next, I'd say, 12 to 24 months, both in currency markets and just in general, share markets and the world economy. Is a recession going to happen in the US? Is it going to happen in Australia? I think that that is one of those common topics which we keep talking about. I don't think it will happen in Australia, personally. I think you hear most chief economists say it's probably 50-50 in Australia. The US, I'd say it's probably unlikely a soft landing. They would need unemployment and the unemployment rate to go up and have a 5 to 6 in front of it. That means that job losses of more than probably 4 or 5 million in the next 12 months. I think that's probably unlikely. Looking at earnings season that we're going through right now, still actually a lot of good data coming out from that, positive data. So it's really hard to see a recession in the US or Australia, for that matter, in the next 12 months. I just can't see it.
Yeah, the full employment's certainly helping both countries. And, just on the topic of China's in this unique situation where there's, I can't remember the exact number, so for those out there who've got Google in front of them, you can Google it. There's something like 300 and something different banks, not branches, but banks in China. But the China Monetary Policy Committee that sets and determines, their monetary policy, they have the ability to push through very rapid change very quickly. So everyone will jump on this call, and we actually had a client who used to sit on these calls and gave me some fascinating insights. And they would virtually say, okay, as of 9 a.m. today, you are to do this, this, and this. We want to increase cash flow. We want to increase capital to this sector, do this, do this. So they have these minions spread throughout China that can do things very quickly and very effectively, as opposed to, say, Australia with the banks. The RBA makes the call, but the banks don't have to do it. And sometimes they don't. So that's where China's got the advantage. But whether that works, that's the big question. As he said, they've got a bit more water to go under the bridge. But what's that next step? So when we go back and look at, obviously Australia and the United States and the other countries as well, are we looking at doom and gloom recession and let alone, depressions? No, it's the full employment's helped us with that scenario, and certainly was saved us to a great extent. And COVID forced people to reduce their borrowing in terms of their gearing ratios. They built up cash reserves. That is getting us through this part right now. The big question is going to be is what happens with interest rates? What happens with the commodity prices? If the interest rates, if the new incoming RBA governor decides, she's not keen for more rate rises, but Jerome Powell keeps pushing it, then, you're going to see a low 6, 100% a low 6. If you see more negative data come out of China, then that's when you're going to see a high 5 in terms of Aussie to US dollar.
Yep, absolutely, mate. Couldn't agree more. I think that's probably a really good spot to leave today's conversation regarding currency movements, what impacts them, and what's driving
Yeah.
the AUD down right now, not up.
Remember, folks might remember back in, I think it was about February, March, and we said when it was at 65, make some transfers, folks, because it's a good deal. Those who did, well done, because then it went back up to 68, 69. It's back at
It did.
65 again. Second bite of the cherry, folks. Just letting you know,
That's
just giving
right.
you a heads up.
It,
You know,
it
no one
is.
knows where it's going to go tomorrow. But what we can say is if you're taking a long-term view, 65 cents is well below the long-term average.
Oh
So
yeah,
don't find you a genius. A lot of people blow up their money. A lot of companies go bust speculating and gambling on what the FX rate's going to do. All you can do is judge your judgments based on the price at the current point in time and your own personal goals, objectives, and risk appetite. 65 cents is pretty good rate,
pretty
especially, and then if we compare it to the pound and compare it to the euro, even better. So
100%, absolutely good bang for buck at the moment. Get a piece of it, um, and as always, take that dollar cost averaging approach. Don't sit on the sideline.
exactly. So right, mate. We'll leave the good folks there, and we'll see you on the next episode, episode 93, rapidly approaching 100 episodes. So
No, we're almost there.
we'll see you soon.
See you guys. Thanks for tuning in. Speak soon.
Thanks, mate.